Hello, hello. Good afternoon. Let me see. All right. Good afternoon. If you can see me, can hear me, let me know, put it into the chat, and welcome everyone. So welcome to the webinar series here with IronFX. Let me know if you can put it into the chat, say hi. Let me know if you can see me and hear me okay. And we'll give it a couple of minutes before we get started into looking at the markets for today. Quite a number of news we've had last night, and a couple more heading into the evenings, and then into tomorrow with the non-farm payrolls as well. All right. Hey there, how are you doing? Fantastic. I hope you're all well. Hey, Joachim, how are you doing? Just want to check again, if you can put it into the chat. Let me know if you see my screen okay, you hear me all right. Just want to make sure that systems are running good and perfect. Before we get started and get going, quite an exciting trading period we have coming up. Oops, let me move that away. So let me know. Hey guys, how you doing? Hope you're trading well. If you're trading well, if you're having fun with your trades, let me know as well. Good, good, good. Very nice. Move that aside. All right, one more minute and we'll get started. Let me know. If you have any questions as well, please feel free to put it into the chat. Let me know if you have any questions. I'll be more than happy to help you with your trading questions as well. All right. Let's one more, just about to get started. Let's see. I got to fix something here. Okay. All right, let's get started now. So welcome again, everyone. We are here with the IronFX webinar series. What we'll be doing today is I will be looking through the markets. I'll be guiding you through my thoughts, ideas, views of the markets, what could happen, what, with the news that's been happening already. Where could the dollar head towards? Where could prices move towards? Okay, so if you have any questions, please feel free to let me know. But as usual, a quick disclaimer is that any information in this webinar should not be construed as investment advice or an investment recommendation, but instead as educational material only. This material is the personal opinion of the authors, and the clients' investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. So please remember, what it means is that you want to do your own due diligence before you jump into any trades. Make sure you check your charts, make sure you check and make sure your leverage is, you're trading with good leverage, over trading, over trading with too much margin as well. And you want to make sure that whatever you're trading with, you're comfortable with the methods, and you do your own analysis as well. All right. So let's get started. Hey, Boniface, how you doing? All right. So take that away for now. And let's go straight into the news first. All right, let's go straight into the news first. I got a little bit distracted. I just started realizing that the prices have been moving quite a bit since we started just before we started the session. Okay. So again, hey Eric, how are you doing? Hope you're well. Okay, so what I want to do here is I want to share with you what has happened into the news so far. Okay, what has happened into the news so far? What we've seen is that at 2 a.m. this morning, 2 a.m. this morning, we had the US FOMC rate statement. 2 a.m. this morning because it is we are in GMT +8. So 2 a.m. this morning, we had the US FOMC, and they actually increased rates from a 3.25 to a 4%. Okay, so they increased rates by 75 basis points. And also what actually happened is that, I'll show you here onto the charts. I'll show it to you now, H1 time frame. At 2 a.m., you can see here when the news was released, the dollar index actually shot straight down. Okay, the dollar index shot straight down. Reason being that if you read into the statement, okay, we'll read the statement together here. If you read into the statement, it's all quite standard so far. They actually spoke about increasing rates to 4%. But the main thing here is that they stated that the committee, in determining the pace of future increases into the target range, the committee will take into account the cumulative tightening of monetary policy, the lags in which monetary policy affects the economic activity and inflation, and economic and financial developments. Okay, so what actually happened here was we saw that markets viewed it as a little bit of a dovish stance from the FOMC, because they're talking about, hey, we might slow it down, we might tweak the policy depending on economic performance. So what we actually saw was, hence, the the dollar index fell from that 111.33 to a low of 110.43. Okay, a big drop. What's the Fed? The Fed is the US Federal Reserve. It is the central bank for the US, right? Central bank for the US. What the Fed does is they control interest rates decisions. They control monetary policy, as in printing more money or printing less money. And with that, the main target from the Federal Reserve is to bring in inflation down, or bring inflation and keep it at that 2 to 3% level. Okay, right now inflation in the US very high, so the rates are increasing. They're increasing interest rates to bring down inflation, or to try and bring down inflation. Okay, so to answer your question there on what's the Fed, Federal Reserve, we also call them the FOMC, the Federal Reserve Open Market Committee. All right, so we saw that move towards the downside because of those lines there where it says that the pace of future rate increases will depend on monetary policy, the lag, overall economic activity and inflation, and financial developments. At first, it was viewed as a bad news, and that's why we saw this drop. But as you can see, after it dropped, it reversed very strongly straight back up within the hour. Even if I showed this to you on the 15-minute time frame, you can see here at 2 a.m. it dropped for 15 minutes and then quickly reversed back up. Why did it reverse back up? You'll notice that it reversed back up at 2:30 a.m. GMT +8, right? It reversed at 2:30 a.m. Why did that happen? You'll notice here, again, back to the news on Forex Factory, at 2:30 a.m., we had the US FOMC press conference, right? The press conference is where the chairperson for the Federal Reserve sits there, answers questions from the press, from the media. And one of the lines, or one of the statements he presented, Fed Chair Powell presented, was that the terminal rate, right? The target interest rate level that the Federal Reserve were planning or expecting could be higher. All right, so I'll show it to you here. The headline. Where is it? Here. Okay, on ultimate rate or terminal rate higher than previously expected. So straight away, the initial expectations was that the Federal Reserve or the Feds would be increasing rates to a target level of 5%. Okay, you can see here now we're at 4%. So the expectation was in December, another 50 basis points increase. Into next year, 25 will hit 5%. With the statement there saying that the ultimate rate or the target rate could be higher than expected, this gives the market the view that the Federal Reserve could continue increasing rates, right? Could continue increasing rates, possibly even quite aggressively. If the US increases rates, that's going to cause more demand onto the US dollar. That's why we saw the US dollar or the dollar index shoot upwards almost immediately when that line was being said during the press conference. It shot up from pretty much from that 110.43 level up consistently, steadily towards, firstly towards that 112 round number. All right, it went up towards 112 on a round number, and then through today, you can see that it's been climbing steadily. Right now, almost approaching that 113 round number. Okay, so very steady climb because a increase or higher terminal rate is very hawkish or very positive for the US dollar, and that's why we're seeing this push towards upside. So what happens here is that back to the H4 time frame, at this point right now, it is approaching that 113 level. And if I showed you a line here, you can see that at about 113, the last time it came, it hit 113, it dropped back down towards about 112, and then bounced back up and finally hit that 113.95 level before turning back down quite strongly. Okay, so 113, if I drag this line right across, you can see it's a very strong level. It's been testing many times. It's tried to break back up. It's reversed back again. Even if you look back all the way across, it's a key level to be decided. So what we're looking for here is or anticipation is for the US dollar or the dollar index to continue trading higher. If it does break above 113, then we could see price rise up towards that 113.95 or almost that 114 resistance level, right? The next key resistance level. I don't think that in this scenario, we will see 114.77 in a hurry. I don't think we'll see that very quickly. We saw that in September. I don't think we'll rush there. What I'm anticipating is that we could see price break above, move towards 113.95, and then similar to what happened in 21st of October, towards the end of October, and also in the mid of October, test that key level and possibly retrace back down again. Right, so we might actually see it test and bounce around these levels here before. I do think that in the longer term, we might see it come up and test that 114.77 level. So overall, still looking at dollar strength being applied. I do think it will break above this level very soon, possibly within this webinar session. We'll see it test and break above, but also remember that it does have a lot of volatility between 113.45 and 113. So we'll see it break above. don't do anything yet, let it break and then let it see continue. Overall, how I use the dollar index, I look at it more as a bit of a guide. If we do see it break above, then I'll look into the other currency pairs to help me or to guide me towards triggering a possible move against or following that dollar strength. Okay, so what I mean by that is, again, now if we look at the Aussie dollar, all right, I'll clear out some of these lines. I've been putting all that, right? Aussie dollar tracking strongly lower. What you want to notice here is that the key support level is at 0.62, right? 0.62. Right now, it's at 0.6283. Right now, it's at 0.6283 or 84. What I'm looking for, again, you can see that last time it came towards this point of 0.6271, it tested, hit, and bounced back up. I don't think in this scenario we will see it test and bounce back up. I think we're going to see it come towards this level. And if we do see that dollar strength continue, then we're likely to see this continue trading towards that 0.62 support level. Okay, so what I'm looking for here is dollar strength to continue to break above that resistance, like you're saying there. And then I'll be looking for a selling opportunity as it breaks below 6271. About 6263. Okay, a tight stop loss because it's breaking a support level. You can afford to have a relatively tight stop loss, about 20 to 30 pips. Take profit about 60 pips. You're looking at a 1:2 risk reward ratio towards the downside on the Aussie dollar. Right, relatively straightforward there on the Aussie dollar. Actually, relatively straightforward for most of the currency pairs for the next couple of days, especially if we do see that dollar strength continue on. So watch out what happens at 6270. If it breaks below that point, I'll be looking to sell it down towards 6200. With that said, looking at the Kiwi dollar next. All right, Kiwi dollar pretty much moving the same as the Aussie dollar, but you can see that if I did this trend line, all right, it's broken. Right, it's broken that trend line now, that channel. Okay, it had a channel towards the upside. Let's change that a little bit. Okay, we had a channel towards the upside, and right now it's broken that channel. I like it that it's broken the channel because that could mean that we're going to see further downside, quite similar to what we've seen here back in September and also at the start of October, where we saw a big downward move. So again, quick resistance level there. I like that it's broken that 0.58 or 5799, 0.58 level. So given that it's broken that, the next key level here I have at 0.5, well, actually, let's make it 0.5545, right? 0.5545. I'll be looking to see whether the Kiwi dollar could continue down. This is quite a significant move, right? From this point, quite a significant move. You're looking for almost a 200 pip move towards the downside. I don't believe that it's going to move straight down, right? As much as it happened here in October, I don't believe that it's going to move straight down in this case. I think that there are a few levels to pay attention to, right? Which levels in particular? If we looked at the Fibonacci levels, okay, what you notice is that it's approaching that 50%. That's fine. But the next key level I want to pay attention to is right there at that 61.8 fib level. Okay, so what you could be doing is, if you did get into a sell, look for it to drop down towards that 5670 level, right? Drop down towards that 5670 level. That's about 70 pips towards the downside, right? My stop loss would be a bit tighter, about 50 pips. So you're looking at 1:1.5 risk reward ratio towards the downside there. You could even have it even tighter at about 30, 1:2, because I have that 38.2 fib level almost protecting that stop loss there. Okay. So we're looking for that downward move towards that 5670 level. If it does break beyond that point, then take profit could be lower. I would move my stop loss to break even or to a positive note just to protect my trade in that sense. Okay, so still, again, relatively straightforward. One key level at 61.8. The next key level a little bit here at, you can see that tail there, that 78.6 level. But I would say if it does break below 61.8, might be a good move already. 78.6 will be the second level. A little bit of a hesitation, but not as much as 61.8. Okay, so still looking for that downward move there on the Kiwi dollar. With that, then let me just move this a little bit just so that we know what we've covered. Right, with that, then the next one I would look at is the US yen. Right, I really like the US yen of how it's been moving, right? Especially the recent move where we saw, where we saw the US dollar weaken, right? That big tail down, that big tail down, it came down to test that 145 or 146 support level, right? Came down, same thing like what happened here on the 27th of October. It came down, test that level, and bounced back up. Big tail towards the downside, test that level, now looking to push back up. A little bit of a waiting game here on the US yen, right? Why do I say that? Is because we do have a bit of a key level here, almost near that 149 level. Okay, so a key level here at almost 149. You can see that towards the end of October, start of November, has hit that level and turned back down. So I wouldn't get into a trade right now on the US yen unless the dollar index continues to strengthen, right? Continues to strengthen, and for price to push above that 149 level, right? I'll take that away for now. And these lines, right? So I'll be waiting for price to break above for that upward move. Then you could be looking for that buying opportunity above 149. First, take profit. You could put your take profit all the way to the top at 150, or you could go for that kind of trade, right? So about a 45 pip stop loss, about a 90 pip take profit level towards that 150 level, right? A nice round number level there. A 1:2 risk reward ratio towards the upside there on the US yen. Okay. Take it a little bit differently, a different perspective here on the US yen is what happens if price does go up, test that level, and start turning back down, similar to what happened here. Okay, so because of that, you can have a little bit of flexibility. What it could mean is that we might even see a bit of an intervention from the Bank of Japan. We might see, on the flip side, if the dollar retraces or weakens a little bit, you can see the US yen trace back down. So what you could be looking for here will be a selling opportunity. Similar to what happened here on the 1st of November, almost similar price level at 148.40. Stop loss, very tight, right? Very tight at about 50 pips. Take profit, you could do it at about 130. I wouldn't put it at 230. I think that although it can get there, you know, we've seen that hesitation here. We've seen a bit of a level there. So I would say my take profit about 128, you're looking at a 1:2.5 risk reward ratio towards the downside there on the US yen. All right. So a little bit of a, if it does go up, if it breaks above the resistance, look to buy. If it breaks below or reverses from the resistance, look to sell. On the US yen, I think that flexibility is quite important and quite useful here on the US yen. Question is now, can it break above 150? Can it break above 150? Quite possibly, but that would mean that we're going to have to see a very significant strength in the dollar index. Again, coming back to the dollar index now, will mean that we probably have to see it break above that 113.95 or 14 level and climb towards that 114.77. All right. So like you mentioned there, you can see that it's approaching that level. Now we're going to see whether it can break that level. All right. So that's the US yen testing that 148.80 level, key level. Let's see what happens there. Either side, there's possibly a trade opportunity. So remember again, right, we've gone through 3 charts now and I've identified 4 trading opportunities already, right? A buy or a sell on the US yen, selling opportunities on the dollar, on the Aussie dollar, selling opportunities on the Kiwi dollar. Again, remember, don't try to enter all the trades unless you have a massive account, then fine, go for it. But if you don't, then don't enter all the trades. Do a pick and choose. Make sure you're not over trading, not over leveraging on your account. All right. So it's not a case where you want to jump into all the trades, because that could very likely be a disastrous scenario. All right. So with that, then let's look at the euro dollar next. Euro dollar has been moving very nicely towards the downside. Take those. Let's clear out the charts first. You can see that the next key level we have is at about that 96 or 9670. Right? If I zoomed out a little bit more, you can see beyond that we do have about 9550. Right now, it's interesting. Why I say it's really interesting is because it has just broken below that 0.9755, or looks like it's going to break below that 0.9755 support level. Could turn into a resistance level if it does break. So what I'll be looking for here as it tries to break that support level. Again, this is on H4 time frame. So a break would mean that when price closes below that level, I'll be looking for a selling opportunity towards the downside. Again, very tight stop loss here, about 30 pips. Take profit, you could go straight away to about 70, 60 something. So 1:2 risk reward ratio towards the downside there on the euro dollar. Okay. I would not try to go for that whole move first. I would say, let's see, first trade, if it breaks, can it get to that 9670 level? And after that, if it does break that point, I'm not sure whether it will break entirely, because you can see that it's bounced off this level a couple of times already. So if it does break that level, then I would say next trade towards the downside, right? About a 30 pip stop loss. Take profit again, about 90 pips. In this case, a 1:3 risk reward ratio towards the downside on the euro dollar. Okay. What happens if we see the dollar weaken? All right, what happens if we see the dollar weaken? Again, this could push back up if it fails to break, or if it does come down towards the level and bounce back up. It's actually approaching that point right now. So if you remember, again, if you do jump into any trades, do your own due diligence, make sure you're not over trading. Okay, so far, any questions? All good? Let me know, put it into the chat. Are you okay? Hey, Teddy, how are you doing? Alrighty. Okay, so moving on from that, we're looking to the pound. No, I'll look into the US Swiss franc first. Thanks, Bondface. All right. I'll look into the US Swiss franc first. Why so? I'll tell you shortly. Look at that. Okay, look at that push up. Why it's pushing up is because of the dollar index pushing up. We've seen the US Swiss franc with the news today. Okay, Swiss franc CPI data was a minus 0.2%. Expected a 0.2, got released at a 0.1. This shows that inflation in the Swiss is possibly slowing down a little bit. So that shows might be a good news in the overall scheme of things. But what we've seen now on the Swiss franc is the volatility in the Swiss franc is driven a lot by the dollar index more so than the Swiss franc itself. Okay, a good question there from Joachim is, which time frame is better while entering a trade? I'll tell you that what I do is that for me, I look at the charts on the H4 time frame. All right, I do my charts first on H4, like I'm sharing with you here. I would do on H4, I'll identify my key levels, such as the support level there. I'll identify a key level here, such as that resistance level. All right, and then possibly anywhere in between, but for now, I'm happy. And then I'll identify, if this breaks above, where could it go? So I'll zoom out. That we don't have any levels. Go to the daily time frame. You can see that the next ultimate key levels at 1.023. Okay, so those are my levels there. And knowing those levels, I'll zoom in again. Right, in this case, I would say I'll wait for the H4 to go up and break above that point to look to buy it up. If I'm not looking at H4, or if I don't have the time to look at H4, then I'll go into the H1 time frame to see whether price could, for example, in the next 30 minutes, push above to break above that point and then look to buy it up. I would suggest to most traders is that you should stay on the H4 and H1 time frame. I do know that there is a tendency or an attraction to trade, the smaller time frames, the M15 or M1. Those is tradable. Those are tradable, but it's going to be a lot more emotional. You're going to see a lot more noise, right? Why do I say that you're going to see a lot more noise? If you look at it on the M1 time frame, you can see that it looks like it's starting to retrace back down, right? It looks like it's starting to retrace back down a little bit. If you're not super keen or not super on the ball with your analysis, you might think that, oh, wait, can I look to sell it from here? And then think that you're going to put a resistance level and a take profit towards the downside. Okay. But you'll be ignoring that overall, that big upward trend. Even more recently, we have that channel towards the upside, there. So you get caught. You get caught if you do it into the time frame, which is too small. So what I would suggest is H4. Do your support and resistance lines on H4. Identify the trend, right? Look for where prices could be heading, key levels to pay attention to. And then if you can do it on H4, fantastic. For example, in this scenario here, right? If we see it test and bounce, great, caught the move. You could be looking, in this case, a long opportunity, take profit towards the next resistance, stop loss below the support. That'd be a great trade. You would close out halfway towards the upside. But if you can't, If you're not looking at the H4, you can't catch that move right at that point, then look at it onto the H1 time frame. All right. So ultimately, it's down to what time frames to trade on. It's really down to experience level. It's down to what you're comfortable with. It's down to how much time you're going to spend sitting there watching the charts and trading on the charts. Okay, I hope I answered your question there, Joachim, in terms of what time frame is better for entering a trade. I would stick to the H1 or the H4 time frame. So back to the analysis here, US Swiss franc, I was just sharing with you already. If it does break above that 1.0148 or 1.15 level, right, you could be looking at further upside towards the 1.0232 level. This will again, I'm sounding like a broken record here, but this could again or is again dependent on that dollar strength, right? If the dollar continues to strengthen, then we're going to see this move continue pushing higher. Then you'll be looking for that upside move, right? A good 60 pip move towards the upside. Stop loss can be very tight here, about 30 pips, a 1:2 risk reward ratio towards the upside there on the US Swiss franc. I do think, or I'm looking at a possible, again, back to the dollar index, testing that level. I do have in mind that, things can't move straight up all the time. There should be some level of a retracement. So we might see a bit of a retracement or consolidation at this 113 level. And if we do see that, then again, checking out the US Swiss franc, we could be, or could we possibly see a rejection of this 1.015 level to turn down? Quite similar to what we saw here on the 21st of October, a test and a turn towards the downside. All right, so if I zoomed out or I shifted the chart across, the US Swiss franc does seem to have that tendency to form a bit of a double top formation. All right. You can see here one top, another top forming right across that resistance level there. Good strong double top to turn towards the downside. So coming back here again, right? Could we see a possible double top? Right, one, a bit of a tail, and then if it tests and rejects, then we could see another with that horizontal resistance there. Could we see also a move towards the downside on the US Swiss franc? Bit of a chart pattern set up here, but don't use just one method alone. If we do see that strength on the dollar index, then the double top formation is not likely to form. I think I have another double top formation here on the daily time frame. Nope, that's it. I think that was a double top there. Oh, there we go. So you can see that the US Swiss franc does seem to always have a double top and a big reversal towards the downside. But right now we're looking at, oh, here we go. This is the one. So we had that double top, and then we have another one here, right, forming a good level, and then that's why we saw that push towards the downside. Okay, so could it happen again? Maybe, but I think that possibly the strength of the dollar index might be a little bit too strong, resulting in not a non-formation of the double top pattern. Okay, so the next one, the US CAD, clear that out a little bit. Okay, the US CAD formed a strong support level at about that 1.3520 level, bounced, tested a few times, came very close last night. A key resistance level there at about 1.3825, and then the ultimate level there at that 1.39, almost 1.3950 level. Okay, so again, It sounds a little bit boring right now, but again, we are waiting to see whether that dollar strength is going to come back in. I'm not sure whether the retracement is going to happen right now or during this session, so I'm hoping it does, but might take a little bit longer. Remember, this is on H4 time frame. Okay, so I'm looking to see whether this is going to come up, hit that level, and turn back down with dollar weakness, or more likely we're going to see it break above this point and push higher, right? So if I drag that right across, you can see that as recently as in September and in October, we've seen it test that level and turn down. Again, in October, test and turn down. It can break. If it does break strongly above, we could see it climb towards 1.3970. And then again, it failed to break there. So what I would be doing, again, if you are looking at a H4 time frame, you might not have the time to sit there and watch. What you could do is use pending orders as well, right? A buy limit, a buy stop. You could have above that 1.38 level. You could be towards the next resistance level. Stop loss at about 30 pip thereabouts. You're looking at 1:3 risk reward ratio towards the upside. Put the plan, have a buying pending order there, and then you'll be looking at the push towards the upside. Okay, is this a strategy that I usually use, or do I have other ones? This is a strategy that I use. So how I trade, I look at the news. I always look at the news first. With the news, it'll give me that overall direction of where I think price could be heading. Then after that, I'll look into the charts using together with the news or the economics. If it's dollar strength, I'll be looking for it to push. I do prefer to enter trend following trades, right? I do prefer to enter trend following trades. So if it does reverse, this will be in the range, so it'll be okay. But I wouldn't be looking for trades like, for example, here to be selling it back down. Okay, so I do look for trend following trades, breakout trades when it breaks above a resistance level to push towards the upside. Good trend, good breakout. Those will be the ones I look for. Okay, so I don't use a lot of different strategies. I kind of have one that I stick to and apply it on multiple different time frames, multiple different currency pairs, but the same thing over and over again. Okay, so that's, I hope I answered your question there, Boniface. That's my how I look into the markets. So with that said about the US CAD, let's look at this big one, right? This big one, the pound dollar. Pound dollar, I have been sitting there. I've been trading it down through the day as it was dropping. I'll show it to you on the H1 time frame, right? A big drop. I hesitated a little bit just before this session because I didn't want to have a trade running as I was doing a webinar. I saw that consolidation, a bit of a support at that consolidation there at 1.1270. Okay. And then I see that break right now. The next key support level is at 1.11, right? 1.11, the next key support level. I would highlight the previous resistance level, drag it right across. It's at about that 1.14, right? Just to make it a bit of a round number there. Oops. 1.14 as a key resistance level. Why am I highlighting these points here, that key resistance and the key support level, is because it's going to get quite interesting on the pound dollar. Again, jumping back to the news at 8:30. So in about an hour's time, right? We do have the Bank of England with the interest rates decision, right? With the Bank of England with the interest rates decision, looking to push official bank rate or interest rates in the UK from a 2.25% to a 3%, right? A 75 basis point rate increase again, quite similar to what happened in the FOMC or the Federal Reserve. Question being now is that if they do increase it, or given that they increase it by 75 basis points, what's going to happen to the pound dollar? Is it going to be similar to the Federal Reserve last night, where they do increase? In a statement, they might say that, you know, they're looking at slowing down further rate increases. Then we're going to see the pound dollar shoot down towards that 1.11 level. Or if they do increase rates and say that they might look at further rate increases, then we could see the pound dollar push up towards that 1.14 resistance level. It's quite sorry. It's quite good that the price now is at this level. I'll move this as a bit of a swing level there. Okay, it's very close to that point of 1.1260. Okay, so what you could be looking for, right, in the lead up to this news event, remember this on the H1 time frame. Let me just do that. Oops. Is you could be looking for either, and you could do this as a pending order, above, you know, play a little bit safer, above 1.13, take profit 90 pips, stop loss could be 30. It's not below that support level, but this is a news event. And then a selling opportunity about 1.1215. Now I'll be a little bit safer below 1.12. Again, stop loss about 30 pips, take profit about 90 pips. You're looking at almost 1:3 risk reward ratio towards the downside. Okay, so you can see that in this case, you're not likely to rush into a trade onto the pound dollar. You can have a pending orders. You're not likely to get slipped because it's quite far away. So you can be looking for that buying opportunity or that selling opportunity, almost a 1:3 risk reward ratio on either side. Okay, so that's the pound dollar. You can see that if it bounces from this level, we can see that push quite similar here. If it tries to break, fails to break, we can see that push towards the upside, or if it breaks towards the downside here. What I'll do is I'll show you here the last time, right? In September 22nd, the last time they increased, the Bank of England increased interest rates also by a 50, at this point, by a 50 basis points, right? So 1.75 to 2 and 2.25. So it's 50 basis point rate increase. What we saw here on the 22nd of September. Let's find it. Okay, there we go. So on the 22nd of September at the, there you go. At the news there, 8 o'clock. There. Okay, you can see that on release of the news, 8 p.m. Yeah. Okay, on release of the news, there, not a lot of things happened, but then after that, following on, we did see the pound dollar trade lower. How much lower in this case? We actually saw it drop by about 87 pips towards the downside, right? 87 pips towards the downside on the pound dollar. So could it happen the same in this case? That was a 50 basis point rate hike. That's why we saw this push down. Right now, we're looking at the possibility of a 75 basis point rate hike. Could we see this push down, similar to what happened on the 22nd? Or could we see a hawkish Bank of England a rate hike to push this towards the upside again? All right. So something to watch out for happening in about an hour's time. So that's the news from the Bank of England with the interest rates decision. One more thing I want to share with you as well is into tomorrow. tomorrow, first Friday of the month, 4th of November, we do have the US US non-farm payroll, NFP employment data to be released. It was a 263, expected 205. Unemployment rate looking to go from a 3.5 to a 3.6, slight increase in unemployment, but you can see here that it was a 3.7, expected 3.7, it actually dropped a little bit. So this might just be averaging out a little bit, okay? So I don't think that's going to change too much. The non-farm employment number has been very positive for a long time. You know, you can see that through 2022, we've seen very good news from the non-farm payroll. Again, we might see this continue on. And if we do see a strong employment change number from the US, if we do see not much changes in terms of the unemployment rate, and average hourly earnings stays at that 0.3%, then we could see again on Friday further dollar strength being applied, right? Further dollar strength being applied, and that would apply right across the board. Okay, so that's one thing to pay attention to with the non-farm payrolls to be due tomorrow at 8:30 p.m. So right now you can see that the pound dollar suffering a little bit, dropping, hitting that level, but it's possibly going to sit there until the news in 1 hour's time before we see that break either to the upside or downside. With that said, I'll look into the last chart here with you guys is gold, right? I've been trading gold towards the downside as well. You can see that that volatility was because of the dollar index, the FOMC interest rates decision, and then it's trading lower. Right now, it's came towards that 1620 level. If I zoom right out, you can see that the last time it broke below 1620, it was at about 1615, right? At 1615, before we saw the big bounce. Again, at 1620, we saw a big bounce. Right now, the momentum seems to be really strong, pushing it down. So I'll be watching to see. I think that it's likely to break 1620 to move down towards 1615. Beyond 1615, be extra careful, because if I went to the daily time frame, you can see that it's been a long time since we broke 1615. This was back in 2020. All right, so if it does break below, we can go lower, but just be extra careful. You're going to see a lot of volatility beyond that 1615 support level. When the unemployment rate increases, how does it affect the market? Well, if the unemployment rate increases in this example here, or this scenario here, it should weaken the currency. But when you pair it up, if we do have a strong employment change, more people working, and also unemployment rate maybe climbing up a little bit, then it's not going to affect it so much, because it does take time to fill jobs. There's more people looking for work. That's possibly a good thing, and more people working, also a good thing. So that's also one reason why I haven't harped on too much about unemployment rate, because usually it should weaken the currency. But I think in this case, if it does get to a 3.6, not likely to have a major or a significant impact on the US dollar. I think that the major number there will be the non-farm employment change number, but overall it's still the current trend, the current sentiment that we're seeing there on the dollar index. Okay, and you can see the dollar index approaching that 1.113 level, consolidating, testing that level a little bit. So let's see what happens there. All right, so with that said, any further questions? I hope you've got good information, got good tips and ideas about the markets through this webinar. All good? All right. You're most welcome there. Okay, so you got no further questions. What I'll do is I'll go and enter the session. Remember, we do have a big news to be released on the pound in about an hour's time. So make sure you prepare for that if you're trading, or watch out for that if you're trading. If you're not, then stay away until after the news before jumping in. And also with the non-farm payrolls tomorrow, possibly another high volatility event. With that said, trade well, trade safe, and I'll see you again. Take care now. Bye-bye.